To begin with, I'd like to invite the Ambassador, WECREATE, Your Excellency. Please go ahead.
Thank you very much. Good morning, everyone, and welcome to the Embassy. This is the third in a series of economic panel discussions that we've hosted here at the Embassy with the help and support of WECREATE. The purpose of these discussions is to consider what policy changes Zambia should be considering in the light of the global economic downturn and how it's affected Zambia. Now is the time to be thinking about what Zambia should do after the election, that we can lay the groundwork now, we can be discussing these issues and making recommendations on what policy changes should be implemented maybe starting on August 12th, 2016. The private sector reacts to how government manages its resources and what policies it brings to bear. Constant policy changes tend to be problematic both for foreign and domestic investors. Also a poor fiscal outlook, rising budget deficits, high external debt GDP ratios, rising inflation, and poor domestic debt repayment will also keep investment out of the sectors that need it most. So I think those sectors are pretty self-evident: power, agriculture, and I would argue tourism.
We all know why the issue of interest rates is important, because it impacts on whether the productive sector can access the resources that it requires for it to become productive, or whether it cannot. As a response to the clamor at the high levels of interest rates was a decision about 2 years ago to place a cap on the rates that the banking system could apply. Now, the idea was that would help to contain interest rates. Unfortunately, the response to that development was that the banking system found it difficult to live with it. And the way the banking system dealt with it was to restrict credit to exactly where you wanted it to go, which was the small and medium enterprises. Because in as far as the large corporates are concerned, there's never really been a problem of credit in this country. The large corporates access credit not only at competitive rates, but sometimes they access credit at even lower than the policy rate. Now, what that tells you is that the banking system makes an assessment as to the level of risk that they want to expose themselves to, and based on that risk, they'll then price their credit. So what happened as a consequence is that we realized that credit was now being rationed away from the small and medium enterprises to the corporate sector. And besides that some of the credit that should have been going to the productive sector was ending up in treasury instruments. So the objective that we sought to achieve with that measure was not realized.
And meanwhile, you have people, I mean, the people working for me as vice president, for example, I did a little survey of them. These are professionals, professional civil servants, who in any other country would have a house of their own. But in Zambia, they rent a house because the interest rate doesn't give you access to your future earnings, if you see what I mean. So we're in a different kind of world. We're in a world with very short horizons. We don't have access to our future income stream. And that, of course, creates the same shortage that's causing the interest rate problem in the first place. And as Kaunda said, we are born with the copper spoon in our mouths, so we don't think we have to work for a living. And he's stuck. I mean, he's stuck with me for 50 years. I mean, he understood what he was talking about. He realized that our dependence upon the copper stopped us from doing sensible things in agriculture, sensible things outside it.
We see a lot of positive things coming out of Zambia. I think recently Forbes magazine rated Zambia the 7th best investment place in Africa. I mean, many countries are striving and working very hard to be in the top 10, and to be in that privileged position, I think it's something that I think we should compliment ourselves as an achievement. What we see is a country where we can drive growth and drive development. And I think while there have been challenges, I think if you look in the last 10 or 15 years, there have been huge investments, and the banking sector has played a very strong role in supporting that growth. And what we're saying to the SME sector is, why don't you borrow to manufacture, borrow to produce something, because it's a lot easier to borrow money to manufacture than it is to borrow money to trade. And the reason is simple from a security point of view. If you borrow money to put up a factory, we'll give you money to buy the land and we'll take security of that land. We'll give you money to buy the equipment and we take equipment as security, what we call asset financing. So if you're borrowing money for a factory where you're buying equipment, the equipment itself provides the security. So you don't have to then mortgage your house.
So I really urge government to move on in terms of trying to list some of the parastatals. I think it would be healthy for the companies to go through such a preparation process, and the capital market could really use that critical mass, which will help to attract international investors. Still, one last challenge, which is causing some reluctancy to actually set up export kind of production, which is obviously the power situation. So that's kind of currently what's holding production companies back for actually doing that expansion and causing them to look at other African countries who has also experienced maybe depreciation of the kwacha to set up production, which would be such a shame. So I think that's also where the efforts making also by the U.S. Embassy to promote power, but also is fantastic. But obviously, maybe in the interim, have priority in terms of power availability for some of the production companies, because that's actually what's holding investors back right now.
My question to you, colleagues, the panel, is how can we, in a very pragmatic manner, diversify away from copper? I know Charles talked about diversification model. What kind of a model? How can you convince decision makers to take a very pragmatic decision, diversifying away from copper?
You know, Chance, what the problem is. We are obsessed with the strong currency. We'll do anything to strengthen the kwacha. Instead of saying, well, that's just the market, you start panicking and doing all sorts of things to try and keep it up. And if you ask a farmer, now is it not the time to plant coffee now? Of course, he'll tell you no. Because if the price of copper comes back, I'm sunk. We've fixed ourselves with our obsession, and nothing will bring it back except an actual, genuine belief in currency markets and futures and so forth, rather than this pretense that we're actually managing it all for our own good. That's I think it really comes from there. If you compare African countries with Asian countries, the Asian countries are opposite. When this latest recession hit, China started depreciating her currency, trying to weaken it deliberately every day, lowering interest rates, so on and so forth, trying to stop being undercut by the rest of the world. And here we sat down, no, let's strengthen it, so we can't sell anything. We have this problem. How many times we have to say it before we retire or we get it right?
I do actually think that that Zambia has great potential and that there is something kind of fundamentally wrong with the way it approaches its economy. I tend to think that it's the fact that the government is too involved in the economy. The answer in Zambia is not more government intervention and the government coming up with an export product that Zambia can create that's going to be subsidized by Zambian taxpayers. I think the answer here is actually the government needs to step back and it needs to assume less of a directive role in the economy, and it needs to let the private sector drive growth. There's sort of two fundamental facts you need to know about economics. Everything that goes up eventually goes down, and everything that goes down eventually goes up. So sooner or later, copper prices are going to recover. Sooner or later, the Zambian economy will then recover as a consequence of that. And if you haven't taken advantage of this opportunity, then 20 years from now, you're going to be talking about another missed opportunity to diversify this economy away from copper.